What if I told you that the IRS can see your Instagram, your vacation photos, your new car, your designer bags, your lifestyle, and they can use what they find there to decide whether to audit you? This is not a conspiracy theory. This is happening right now. And today I'm going to tell you exactly how it works, what the IRS is actually looking for, and the steps you can take right now to protect yourself. Hey, I'm Paulette with PRF Tax Service. I help freelancers, gig workers, and small business owners navigate taxes without the stress year round. Hit subscribe if you're new here because I post real tax strategies every Tuesday and Thursday that are designed to save you money and keep you out of trouble with the IRS. Now, let's talk about what the IRS can actually see. First, let me be very clear. The IRS is not sitting there scrolling through your Instagram feed looking at your brunch photos. What's actually happening is more sophisticated than that, and in some ways more concerning. The IRS uses a combination of automated data matching systems, third party information reporting, and investigative tools that can include publicly available social media data. Let me break each one down. The first tool is data matching. The IRS receives information from thousands of third party sources every single year: banks, payment processors like PayPal, Venmo, and Cash App, employers, investment platforms. And starting in recent years, digital payment apps are now required to report transactions over $600 to the IRS. That means if you're getting paid through Venmo or Cash App for your freelance work and you're not reporting it, the IRS already knows about it. The second tool is the 1099K reporting requirement. If you receive payments through third party payment networks, and that includes PayPal, Stripe, Square, and others, those platforms are required to issue you a 1099K when your transactions exceed certain thresholds. The IRS gets a copy of that form at the same time you do. If the income on your tax return doesn't match what those platforms reported, that's an automatic flag. The third tool is social media monitoring. Now, here's where it gets interesting. The IRS Criminal Investigation Division, which is the law enforcement arm of the IRS, has documented cases where social media was used as part of audit and criminal investigation processes. If someone is reporting very low income on their tax return but posting photos of luxury vacations, expensive cars, designer clothing, and high end restaurants, that lifestyle inconsistency can raise questions. It's not an automatic audit trigger, but in cases where the IRS already has reason to look at someone more closely, social media can become part of the picture. The fourth tool is public records. The IRS can access property records, vehicle registrations, business filings, and court records. All public information. If you report $30,000 in income, but you just bought a $500,000 house, that's a data point the IRS can see without ever touching social media. The fifth tool is informant tips. Yes, the IRS has a whistleblower program. People can report suspected tax fraud and actually receive a percentage of what the IRS collects as a reward. Former business partners, employees, and even ex spouses have used this program. If someone who knows your finances reports you to the IRS, that can trigger a very targeted investigation. Now, who does this actually affect? The reality is that most people don't need to worry about social media audits. The IRS doesn't have the resources to investigate every person who posts a nice vacation photo. What they're looking for is significant and obvious lifestyle inconsistency, someone reporting poverty level income while publicly displaying significant wealth. But here's what does affect regular self employed people and freelancers: the payment app reporting. If you're getting paid through Venmo, Cash App, PayPal, or any other digital payment platform for your freelance work or side hustle, and you're not reporting that income, the IRS is going to know. That reporting threshold has been a moving target in recent years, but the direction is clear. Digital payments are being tracked, period. The unreported cash. If you're running a cash based business, hair braiding, cleaning services, tutoring, any kind of service where clients pay you in cash, and you're not reporting all of it, that is tax evasion. And lifestyle indicators like social media posts can absolutely be used to investigate that. The business expense deductions that don't match your lifestyle. If you're claiming your car is used 90% for business, but you're posting photos of road trips and personal travel in that same car, that's a contradiction. Be careful what you post publicly when you're claiming business deductions. So, what can you do to protect yourself? Step one, report all your income, every dollar, whether it comes through a 1099, a payment app, cash, barter, or any other method. If you receive value in exchange for your work, it's taxable income. This is the single most important thing you can do. Step two, be mindful of what you post publicly. This doesn't mean you can't live your life or share your success. It means be aware that public posts are public. If there's a significant gap between what you report and what you display, that's a risk. You can make your accounts private. You can be thoughtful about what you share. Step three, keep your documentation tight. If you're claiming business deductions, make sure you can prove them. Receipts, mileage logs, bank statements. The better your documentation, the more protected you are if anyone ever looks at your return. Step four, make sure your payment apps are set up correctly. If you use Venmo or Cash App for both personal and business transactions, separate them. Set up a business account for business payments. This makes your reporting cleaner and reduces the risk of personal transactions being miscategorized as business income. Step five, work with a tax professional. I know I say this every video, but it matters. A professional helps you report correctly, claim what you're entitled to, and build the documentation that protects you if you're ever questioned. Here's the bottom line. The IRS has more tools than most people realize: data matching, payment reporting, public records, and yes, in some cases, social media. The best protection is not hiding, it's reporting accurately, documenting everything, and making sure your tax return tells the true story of your finances. You don't have to be afraid of the IRS, you just have to be prepared. If you want to make sure your tax situation is clean and protected, I have free 15-minute consultations available. The link is right below this video. Go click it now before you forget. It's completely free and there's no catch. And grab the free tax savings checklist in the description too. It takes 30 seconds to download and could save you hundreds at tax time. The link is right there. Go get it now. Drop a comment below. Did this video surprise you? Are you going to make your accounts private after watching this? I want to hear from you. I read every single comment. Subscribe if you haven't already. New videos every Tuesday and Thursday. I'll see you in the next one.